Wall Street gearing up for March Madness. The markets have a reputation for major swings this time of year, with the Nasdaq topping out in March of 2000, but hitting rock bottom in March 2009. So what's playing into this month's dramatic performance? Ed Butowski is managing partner at Chapwood Investments. Ed, nice to see you.
Nice to see you, too. Thanks for having me.
Thanks for being here. So far this year, we're 2 months into the year, stocks looking pretty good, but you say that March is very important. Why is that?
Yeah, it really is. It's probably the most important month of the year because what we're finally seeing is clarity on how earnings might look throughout the rest of the year. It's important also to remember that months and months ago, very smart analysts made forecasts and predictions on what they thought 2015 numbers were going to look like in respect to earnings for companies. But as we get into the first quarter, and we're about to see the end of this first quarter, analysts are now starting to get from companies what is called guidance, and guidance means basically are their earnings forecasts in line. And during this month, you'll see a lot of analysts will start revising their earnings predictions lower, which means stocks have already moved up. We might start seeing them move down if those earnings forecasts aren't met. So March is the most important month in my mind of the year because it really dictates how the rest of the year might go.
Well, for companies, as far as their growth, a lot of that happens outside of our borders. And with all the geopolitical events going on around the world, how do you see things coming in, Ed?
Yeah, I mean, you hit right on it. That's a great question because a lot of our companies, in fact, the majority of our larger companies derive their growth in their earnings from outside the United States. So we have a lot of geopolitical events happening all over the world, a lot of problems. So a lot of companies were looking to say, we're going to see expansion in Africa, we're going to see expansion in Europe and China and around the world. And if we're seeing problems overseas, again, those earnings might not be reached, the ones that have been forecasted. So when we look in our business out and say, how are companies doing? We don't just look in the United States. Quite frankly, we're looking more outside the U.S. to see how those earnings are going to come in. So when we hear about an event going on, a negative event or a positive event around the world, that does impact everybody's portfolio. It's something everyone has to keep in mind.
So let's talk about the Nasdaq. For the first time in 15 years, flirting with hitting 5,000. You know, a lot of tech stocks like Google, Apple trade on the Nasdaq. So what does this mean? Are we about to hit another bubble?
Yeah. Well, I'll tell you, there's a couple of different things to look at. When we see an absolute number like 5,000, that doesn't mean really too much to me. You're going to hear a lot about it. What really matters is, are stocks overvalued? And overvalued meaning, are they selling way above what their projected growth rates are? And right now, I don't see that in the Nasdaq. I do see that in that bubble that you just mentioned in some social media stocks. I think the only bubble in the market right now are some social media stocks, and that does not include Facebook. But other companies that don't have the earnings to support the lofty levels of those stock prices, I would be careful. I'd also, Lee, I have to tell you, I'm not comfortable looking at going forward in this market for 2015. I just think there's too many pitfalls, and I think most people need to start pulling back a little bit out of equities, especially if they have a shorter term focus, because this is not going to be a really good year for equities.
Okay. So, you know, in talking about people and how this will affect, you know, people at home, you mentioned when we spoke earlier today that people can watch on their phones, their portfolios essentially going up and down as things change in March. What's your advice to them?
Yeah, I'll tell you, it happens to me too. I mean, we're constantly looking at these things. And along with that, you can see the value of your portfolio. You know, there's nothing that happens day to day that really matters, but we react to it all the time. And what I want, you know, if you have a long-term focus, don't get caught up in all the headlines, because the headlines are going to grab you and make you get very emotional. But if you need that money that's invested right now in a short period of time, don't have it in the market, because you don't know where that market's going at any point in time, especially in the month of March. So put money aside that you need to live off of for at least a year to 2 years. Put that in cash. But if you have a long-term focus and you see the markets moving all over the place, guess what? Just live with it. But don't try to make moves based on these headlines. The headlines are going to, you know, unnerve you, and you don't need that, especially when you're trying to grow your money for retirement.
All right. Hard not to get emotional about our money, but we will try. Ed Butowski, thanks.
That's right.